Hi, Warriors. Let's have a great week. AJ, Bran, hello, Simon, K Slape, and let's do what KMan says and have a great week together.
Good morning, Dale. Good morning, everybody.
Hello. Feel real fresh. Feels like, I hope that Wednesday doesn't feel like Friday this week. How about you?
I'm having a slow starter this week.
Okay, so we're getting some follow through dollar weakness. It's pretty interesting what happened last week. I mean, hawkish Fed, strong headline numbers. Tip of the hat to Blake during the show on Friday, right after NFP bought Aussie when it was sharply lower on the headline number, and huge moves. Nice trade. And Ryan picked the bottom of gold last week down here. So, I mean, you're getting some real nice actionable ideas right here in F.A.C.E for free if you appreciate it. Perhaps it gives you that extra liquidity to help your career and become part of our community. So what are you thinking here, Kay, with the week opening up here after, some very outside moves and metals?
Yeah, we were discussing it earlier as well. We saw this reversal on Friday. Then this morning, dollar was actually a bit higher because of the Chinese political denials of the reopening, keeping the COVID policy alive. But then all of a sudden it turned, and we saw quite a lot of dollar selling going on across the board, which to me may be a bit ahead of the midterms coming up.
Okay.
I think we're preparing the midterms, and markets preparing a split or a lame duck government. So
they like that.
Or a coup.
Or a what?
Or a coup.
A coup. Oh, okay.
It was a bad dad joke. Let me go back to my quarter. I'm going back to sleep. I'll see you guys in a bit.
Good morning.
Hey,
hello, everybody.
Sounds like you're rested. And Stel, hi, how are you?
Hey, I'm very good. I want somebody to explain to me, please, because I was away obviously Thursday and Friday. I saw the numbers, they came in strong and all that, and then the market sold off initially, and then we just came right back. So what was that all about? Can somebody give me the executive summary of that? Why we didn't follow through? I thought we were going to be a lot lower with those numbers.
Yeah, gold didn't break down, that's for sure.
Yeah.
Anyone know?
Yes, I think it's the unemployment number. The number of unemployed is rising, and there's
rising.
A discrepancy between what people see and what's happening behind the scenes, and that's one of the explanations. But I really think it might be already ahead of the midterms as well. People adjusting positions and all that.
Okay.
All right. So is Ryan here today?
He surely is.
All right,
hello,
buddy.
Ryan.
All right, so Ryan, you have I know you're long-term Aussie, but do you have any targets? I've seen like 66.5 bandied about for this leg of the move. You have anything?
Yeah, that'd be nice. And the big level up here is 65, 20, 40. We really need to get through that.
Right at the moving average. Yeah,
it's a bit of a zone if you look at the shorter time frames.
Right
it's a bit like the gold 1675.85 zone.
Okay.
One of those ones that just really sticky. So if we get above there, if we get a proper move above there, I'm looking to add to my longs on a break trade, play some short term, stick some in the slow cooker, as we say.
And I think you and I were talking about the potential of Canada being a right shoulder after the NFP. Certainly looks that way.
Yeah, it's looking like we're getting a break now. I did give a bit of money to the FX gods on Friday, playing longs off 135. But it's looking like it's on its way to breaking.
Yeah. Okay. So I guess, I mean, I don't see any reason to buy the dollar right now. But I will tell you that I'm coming around a little bit to, just this action in the dollar. And I do think we'll take out this low. But, this does not, unless it's a distribution top, it doesn't smack of, anything impulsive from the highs. It's just correcting kind of in time more than price, unless we really accelerate, and I initially thought we could get all the way back down to like 104, 105, and it's struggling, and cable's leading euro. So I'm thinking, maybe 108's, a reasonable target, and then we'll see. Maybe
I
the
think we
dollar
see
makes
your
another run.
I think we see your 104s, 105s before we see any highs.
Okay, that's here. That's what I was looking for. Okay, so what do you do then with yen? It keeps holding 46. You would think eventually we'd fail here.
I think so too. I was bearish the dollar. I've been bearish dollar for a while, obviously being long Aussie dollar and short dollar yen. But Powell last week, it had me thinking, would they really go higher? I think the market's calling his bluff a bit on that. And I think given the data we're seeing, it's going to be a stretch to see them getting up higher than what the market expects. And everything I look at, I'm coming to the conclusion I don't see any reason to buy the dollar. I'm not calling for an absolute collapse or anything like that, but the reasons for buying it, the reasons why it should go up, are becoming less and less, in my opinion. And if it ain't going up, there's only one other way it can go.
And if it's going to go down, I'll tell you what I'm looking at: dollar mix. It's about to take out those lows, the May lows.
There's another reason why it should continue lower. The fact that with all of that, the Fed being a real very hawkish on the statement, and the headline number could not drive the 10-year yield to new highs. Looks like a failing rally to me. And, so peak in yield should be supportive of all the things we talked about: metals, less, yields, real yields dropping, or negative yields, whatever you consider them to be right now, dropping, is supportive for continuation moves in gold and silver. In fact, silver, just like that area Ryan pointed out, in gold, pretty important area right here, a little shade under 21 in silver. KMan, we're going to break out here.
Yeah, I'm looking at that 2150. I bought it.
The moving average.
I bought it on the break above 20. But then with the midterms, this is just an add-on to long terms that I'm keeping. But I've sold it this morning because with the midterms, I'm not sure if the Republicans are going to block everything. Biden's build back better programs and stuff. Perhaps the metals will lag a little bit.
Yeah.
Waiting to see what happens on the midterms and then make a decision.
I was going to say, and good morning, team. And I was going to add to that.
Good morning, Blake.
Good morning. It's I feel like after this weekend, I actually slept. I finally got some sleep after getting Steve and his family home from
Oh, you
Arizona.
must really be tired from flying them home.
Yeah, I mean, I'm really tired. My back hurts. Actually,
your wings, man.
No, but
All that arm flapping.
after shuttling him out of here, I slept. I don't sleep much, but this weekend, I did actually manage to get some extra sleep, and it's been nice to do that. So I feel a little bit better, a little bit more refreshed. But I wanted to mention, KMan, you'd said midterms a couple of different times. It's a big deal this week. A lot of people don't realize that this is the. Okay. Let me just tell you this. I have zero expectations because I have I've heard a lot of analysts, and they. They have said things, and then people that I know personally have voted in such different ways that I never would have expected in, years of knowing people. So I really have zero expectations right now, but I think that the big risk is that we're going to get, Congress split, and then, Biden can't pass all that
lame duck
stimulus as KMan was just talking about.
Yeah.
So we'll see, but it is going to be a big deal, and that's why I think you have to be cognizant of the midterms this week, and be careful with open positions. And not only do we have that, we also have the inflation data coming out on Thursday, which is a big deal. But I want to get you guys.
Did you carry a firearm to your polling place, Blake?
No.
Because there were people out there armed watching people vote at drop boxes.
Dude, I've had people pull a gun in my face. I'm like, dude, you're gonna ruin your own life. Get over it. It doesn't matter.
But
like,
it was
people
crazy
are
out there.
The chances
wasn't it?
of somebody pulling a trigger with a gun in your face is very, very slim. So I've had it happen. I don't, I just push it away. But going back to so I don't care about that. Going back to though, into polling and there's intimidation. There's a lot of police officers around.
It's crazy.
They are watching for voter intimidation cases. But anyway, screw that. Going back into China, or I wanted to ask the team about China. There's these headlines. There were these headlines over the weekend about China, kind of putting to bed like the zero COVID policy. But look at the market, just shook it off. And I think we all have to take a step back. And I mean, you look at the Aussie dollar, just filled the gap again. And, I was long Aussies over the weekend, just closed it out for a profit. Even though
that was a great live trade, man.
Well, thank you. No, I actually opened that following the non-farm payroll, closed it Friday in the morning, took Steve to the airport, Steve and his family to the airport. And when I got back, the Aussie was nearing its highs for the session. And I just opened it back up again. And I said, I'm going to carry it over the weekend, because all these, big, strong candles that we had going into it. But when that news came out, I really didn't worry about it, because I'm like, do you guys think, and this is where I want to ask the team this, like, I was like, okay, I see the headlines, but we all know China's not gonna, they don't have like there's no like a neon sign on their windowsill that says China is open and China is closed. Like, there's no neon sign that's gonna flash and say, oh, China's
like
open again. Is it? Like a diner. It ain't that simple. I mean, it's going to be a process of them opening their economy again. So when you get these, you get these headlines, I mean, don't freak out. I mean, I guess that's what I want. That's my takeaway.
We just had another one, Blake. Had another one literally 5 minutes ago from the Wall Street Journal saying China weighs zero
leaders
COVID
consider steps towards reopening zero COVID, but no timetable has been established. Well, no shit. No shit.
So, but it saw Aussie dollar jump up to the highs again. It saw gold jump up. These headlines are having an effect.
They are, but don't freak out.
You've got a trade between them.
Dude, you guys get like you. I know some of you are probably, you might be at home and you might be worried about COVID, and maybe it's affected you guys and gals some way. And look, I've been living with a zero COVID policy in Arizona since COVID started. I mean, no one in where I live cares about it at all. It's just a fact. And it is that way with a lot of economies. China is not one of them. But even the most staunch COVID strict places in the United States have been really opening up this year, and it's only a matter of time before China does the same. And so we have to just continue to watch them inching that way. I mean,
what I'm calling them? I'm calling them the COVID pivoters. It's the same as what people are doing to the Fed. The Fed are going to go turn dovish. Well, there's COVID pivoters trying to trade China opening up, or moving away from their easing. And like the Fed and that trade, it gives us opportunities. That's what we've got to look for.
Yeah, it does. And I think just speaking of opportunities, yesterday's gap down in the Aussie. It was gap down 60 pips. Now I wasn't going to play because I was already long and I was doing things with my family because we finally got Steve's family out of our house. So we were, doing things together. But I took that opportunity to say, I took that opportunity just to hang on. But I know a lot of people were like, should have been buying that dip. So anyway, that's the way I'm looking at it now. But here's the Aussie up against resistance. This is what you got to be mostly aware of. And that's why, as we're up against here, this resistance, as I was telling the traders this morning, like here, this is our ForexAnalytix chat room. Go into the trades room. You can see I closed out my positions from over the weekend, and I took a loss in the US dollar Norwegian krona, closed out a gain in the dollar CAD and the Aussie. But I also explained to people in the chat room, let's go over to the general chat room over here, that you can see in the analysis this morning, and this gets sent to your ForexAnalytix app, by the way. There's the Aussie right here. You're back at triangle resistance, and you have to realize that North America, we got to see how North America is gonna absorb this news. And with the midterms tomorrow, that's another risk that we are dealing with. Here, let me put that back up here in my other screen. That's what we're dealing with as we go into North American trade. How are they gonna see this news? And we got midterms coming up, so just be a little careful as we're up against these levels. Now, KMan, what do you think about China policy? How do you see it?
I think they're playing games, sending out messages, taking off pressure of the Chinese yuan, of the Chinese equity markets, then coming back with some official comments that they are not there yet. But it does look like, I don't know if they're testing the waters, if they're trying to send out signals, but not yet officially. So from a trading point of view, it looks that they want to keep stuff a little bit more in a range than outright negative Chinese yuan on the back of the zero COVID policy. And I don't think it's a coincidence to see those messages coming out. It's going to take months before they really reopen.
Right. Do you think China's going to keep a zero COVID policy and lock down forever?
But of course not. One day they open. One day they will reopen. One day they will.
Is it gonna? Are they gonna have a sign that is neon and that flicks on it says "We are open"?
Dine in open. There, but perhaps they will give you the message on your iPhone 14. I don't know.
China's pivot actually is going to be a lot better defined than the Fed's pivot.
You think so?
I think so. Yeah.
You really? Okay.
Because it's going to happen one day that they're going to say, "Look, these are the new rules. This is what we're doing."
Yeah.
So,
you know
but
what?
yeah.
If they buy our vaccine, that would be a pretty good signal. If they use it, there's been some talk that they're looking into, using the vaccine that we have here, the mRNA.
Yeah, well,
is it France or is it the German one?
I don't know what vaccines work better than what, but I guess we'll see. Let's talk about the yen. So the dollar yen's pushing back down, towards that really critical one. I would say it's like 145 to 146. I mean, I believe that we've come out of this ascending wedge, so it's just a matter of time before we break down. But I don't know if this is the time. As we head down there, I think that's going to be more of a product of inflation on Thursday, like how strong or weak the inflation print's going to be. So taking a step back or looking ahead, actually, is what I should say, is looking ahead into this week. What are you guys expecting with inflation data? Like, Dale, do you have any expectations with inflation other than it's going to move the market?
I think we'll get a good number.
You think you don't think that you're not in the inflation has peaked camp then?
I think that it's temporarily peaking. Yes. we'll
Okay,
start
but the
again.
number's still going to
We'll-
be stronger than
No, a good number, meaning it'll be a little, they'll find reasons that it, it might be
like
slowing.
the market is going to see it as good, and so
Yeah.
it's going to be a weaker number.
Yeah.
I see.
Just a guess,
Okay, now Stelios believes otherwise. What do you think?
It'll be hot.
I think, well, look at how it's calculated, right? They add another month and they remove the previous month. So they add a month of higher inflation and they remove a month of a year ago, which is lower inflation. So I don't think yet we're going to see a drop. I mean, 0.1 or 0.2, either way, I don't think it's going to make a big difference anyway. I think the big drop is coming in the first quarter of 23. But for now, this week, what's the expectation again? Sorry, I missed it.
It's 8% year over year.
8%. Yeah,
we're looking at a chart of it right now.
We are. Okay, sorry, let me check that. Yeah, I think for choice is going to be probably maybe a smidge higher. So it's going to be 8.1, 8.2 maybe. I don't know.
Dude,
so
the market would hate that. You would see
they
equities,
will hate that, yeah.
You're going to see the S&P down at 3,600 or so.
Potentially, yes, but I could be wrong, obviously. But I think just from the mathematics of it, I think it's difficult to see another drop because it has been dropping 2 months in a row, right? Two readings in a row.
Yeah, I mean, I guess we could call that dropping.
Yeah.
I mean,
well, let's see.
Let's see. Maybe is that dropping? I don't know. Is that dropping? Ryan, what do you think?
I think. I don't know. I've been saying inflation should start moderating a few months ago. It looks like it might be. We've had 3 lower readings, nothing collapsing. So anything down around 8, 7.9, 7.8 is going to start to show a trend lower. That'd be 4 lower prints on the trot. But we need to keep an eye on that core number because that core number is up twice.
Look at the rise in inflation since last year. It's just nutty, right?
Yeah, bonkers. It's bonkers.
I mean, that's just crazy.
Caught everyone out. That's why the Fed are raising, on the trajectory they are. But if the core's up again and the headline's down, that's that's not gonna make it seem such a soft print. So you've got to look at both numbers. Definitely got to look at both numbers.
Okay, KMan, do you have any opinions here on inflation this week?
I'll be watching the game, man, and I really don't know. But and I really don't know what the combination will give between the midterms and the CPI for now.
Yeah, well, Dale, you know what I'm doing.
Anything that I'm doing right now is really short-term stuff, and then we will see what happens over the week.
Dale, you know what I'm doing?
What?
I'm pulling a Dale right now. I'm doing intelligence gathering because I have no freaking idea what's going to happen with inflation data this week. So I'm trying to get everybody else's opinion and take from them.
Yeah. Well,
hey, that's what you do here at on F.A.C.E and with your interviews that you do each and every day is you intelligence gather. And that's what I'm doing with our team right now. It's like, I'm not really, because me personally, I'd like to believe inflation has peaked, but there are a lot of metrics out there that suggest that we haven't. And so I'd like, I'm trying to get a gauge from our team on how they feel. And I'm really undecided as well. And I'm with you, KMan. I mean, between the midterm elections, between the midterm elections, between inflation coming out this week, and if you look technically on all these majors, we are in consolidation patterns pretty much across the board. I mean, you got the euro that's in this like slight ascending wedge here, but you could also argue that we might be in a triangle consolidation. You could just do it like this, right? In black, you can kind of see it. You can go over to the sterling and go, we are in a triangle consolidation. How about the Aussie? Very similar. Kiwi, I mean, we're trying to bust a move a little bit higher, but the dollar CAD, we're on a neckline of the head and shoulder pattern. You've got the dollar Swiss that's got a double top brewing, but we've got some pretty critical support here. You got the dollar Mexican peso, which I would argue is below support, but in all actuality, do you want to get caught short down here ahead of Banxico on Friday or on Thursday after inflation? So you got everything kind of teetering, and you have the dollar yen, by the way, that's also, if you guys haven't seen it, it's on, you could say that's a wedge. So you got all of FX that's really teetering. I'm not really too sure if I want to get ahead of that, just now, with everything coming up this week. And listen, guys, if you're not familiar, if I just breezed over all of those FX technical patterns and you're like, holy shit, I wanted to really like focus on one, during the morning edge, that's when we come through and we focus on all of these instruments in its entirety. And then, Steve and Stelios actually go through a lot of individual stocks and individual instruments and cover the ones that you want to see. So make sure you join ForexAnalytix. Check it out. The best way to do it is join the trader funding program, because if you want to trade our money and keep 75% of the returns, so you have unlimited time to pass our assessments, and you want to access these larger amounts of money, you also get ForexAnalytix for free for a period of time. Then you can jump in our community right here. Then you can jump in our chat room and our trades room and go, oh, this is what Blake's trading. That's what Brand's trading. That's what KMan's trading. That's what, Mark and Ryan and Greg and, everybody else in the chat rooms, not just me. So you guys make sure you take advantage of the trader funding program, ForexAnalytix, and into this, more in-depth analysis, because we just don't have time to go through it all right now. Hey, I want to talk
Blake,
a little. Yeah.
So can I just interrupt very quickly? If you go back to the chat room, I just want, if you can show a chart that Simon just put up, just scroll a little bit higher on the general room.
Yep. Give me
the reason why I think it would go just a little bit higher. There it is. So that green highlighted bar is getting replaced by the new bar in the inflation calculation, which is going to be higher.
Yeah. Explain to us. Okay. This is CPI year over year. Got it.
Yes. So that's going to be replaced by something which is going to be well above. That's why I think the number is not going to drop. And that's why I think Q1, which is where we get close to that peak, is where we're going to start seeing a decrease in inflation. Anyway, just a very nice chart. Thank you, Simon.
Thank you, Simon, for posting that. Appreciate that. So,
see, I didn't think the comparisons were going to be tough to beat. I thought we already had the high numbers. So Simon
not
does
yet.
his homework.
You're very close. Yeah.
Yeah.
So let's talk a little bit about really quick about precious metals. I know you guys talked a little bit earlier, but here's gold really testing, trying to break the longer term descending trend line here. What do you make of? I mean, silver had a huge day on Friday. We're getting up to that 38% retracement, maybe the breakdown point in silver. I think a move above the 200-day moving average would be absolutely ginormous. I would chase silver on a close above the 200-day moving average. What are you guys thinking with
where's
precious
that come
metals?
in, Blake?
That comes in right now at 21. Well, it was 2150 last week, and it's 2147 right now. But what are you guys thinking here?
Couldn't agree more. These are also the lows from before, from September, the December. So a break above 2150, obviously with nothing major changing in the macro environment. For me, I'm going to chase it like crazy. I always have a small long in silver. Unfortunately, it's not big enough at the moment, but it's quite small. But if a break of above 2150, provided that the Fed hasn't gone berserk hawkish, I'm just going to buy wherever it is.
Yeah, and you look at gold. It did close above that trend line. And KMan, I know you're long silver. I mean, and I think if you get both of them moving in tandem, that's going to be pretty bullish. But what are your thoughts with silver, KMan, being that you've been focusing on it?
Well, I mean, as I said before, I'm waiting to see what's happening this week. But I'm with Stel. I think at some stage this thing is gonna really take off. In any move back down below where we were the other day, just below 19, I'm going to try and start to catch knives.
Yeah, I mean, look at where the 200-day moving average comes in with all those previous lows, all that previous support. I mean, we break in a good way, like in a solid fashion, above that 1850 or I'm sorry, 2150. I mean, we could really trade back up into the mid-20s. I mean, that's a big move. That's not some small potatoes move. That's a big move percentage-wise that you're looking at. And if you look at gold and the recovery that we could see in gold too, we get back above, these previous lows. That's we already are, by the way, but we get above like 1680, and that thing could really see the 200-day moving average, which is also a really big move as well. Do you guys have any opinions? Oh wait, do we have any news coming out today? Sorry. Just I'm not sure if we do. I don't think we do.
No, we don't.
Okay.
We don't.
Okay. Yeah, usually some of these headlines come in right. Oh wait, we did a time change. So I don't know what time it is for everybody, but since it just happened yesterday and we don't change our clocks, but I wanted to see if anybody has any opinions on the indices here. But if you look at the S&P, we're basically back at a 50% retracement of the bounce. I would argue that since we had this false breakdown a couple of weeks ago, this one right here, guys, you had that false breakdown a couple of weeks ago. False breakdowns eventually lead to breakouts more times than not. So the reason why I say that is, we are, with midterms, seasonality, if we can hold, and not trade into a new low. So I would say anywhere between 3,600 and where we currently trade. If we can hold these levels, then there's a good chance that we head back up towards channel resistance by year end. Now, is that going to disrupt the downtrend? No. Would it give us better levels and loftier levels to be on the short side? Absolutely. But I think that is a risk going into, here the next few weeks, especially with seasonality in play. So just some food for thought, guys, since we are, basically just consolidating, waiting for the next move in the markets. Dale,
Yes, sir.
Stelios, KMan, Orion, and I didn't hear from Steve. He's probably listening in, but I know he's swamped as he's getting his head back into the game after traveling for the last 2 weeks. Steve, if you're here, it was great having you.
Oh, I am here.
Oh, you are?
Oh, yeah. I've been since the beginning.
Hey, how you feeling?
You get to hear my voice again without having the too early in the morning
raspy voice. Yeah. It's way too early and I'm too sexy voice. Well,
yes,
Steve,
exactly.
we had a great time having you visit our family here at my house.
It was our pleasure.
And I hope you had a great trip back and welcome home.
Thank you.
And the dollar peaked because Steve came to America.
There you go. The dollar peaked because Steve came to the U.S. That's right.
See, I go places.
It works that way.
I go places and they fix problems.
You must have had a good time in Vegas, Steve, given what euro dollar's doing this morning.
Sorry, say again, Blake.
What did you say, Ryan?
Say again, Ryan.
You must have had a good time in Vegas, given what euro dollar's doing this morning. You must have been changing some back up.
Yeah.
I actually deposited some dollars in the bank today. I have to tell you.
Oh, hey, you took advantage of the dollar peakness, so that's great. And hey, I just wanted to say, Steve and I did have a great time in Vegas.
Oh yeah,
gambling until the wee hours of the morning, because he was deprived of being able to even leave his room because his son was asleep. So I drug him out onto the strip and we played. We gambled a little bit. Anyway, hey Dale, I know you have an interview. I want to pass it over to you. Thank you very much, team, for being here, and everybody listening in. Thanks for supporting us as always. Dale, it's off to you.
Thank you, Blake. Thank you, team. Everyone, let's have a great week, and we're really starting it off in a great way with Pavel Hala. Pavel, welcome back to F.A.C.E. Great to have you.
Do you hear me?
Got you loud and clear, Pavel.
Oh, great, because
welcome back.
With this.
So last time we talked, you were interested in bull spreads and sugar, and they worked out for you. So, I always look forward to you being here, Pavel, because you come here with some conviction on a position that you believe in and your work is pointing to, and curious what's on your radar today.
Thanks, Dale. So I decided that I will not speak about some specific opportunity because, frankly, if you look at the price action on Friday, it was everything up, dollar down. So we are heavily influenced by macro, and of course, yes, it is possible to find some uncorrelated opportunities. The spreads, like the sugar spreads I talked about last time, was a good example. But overall, in this environment, it is critical to get the macro picture right. If you get a macro picture right, it doesn't matter what commodity or what, I don't know, sector or index you pick, because the macro will be a tailwind.
Yeah, so you have the tide. You have the tide going with you. You have the wind.
Definitely.
You have a tailwind instead of a headwind.
Yes, definitely. That will be critical in the upcoming.
Well, it sounds to me that you're talking about macro, that maybe you think this dollar pullback or top or correction is going to continue, and a weaker dollar may lift all boats. Am I guessing right?
Yes, it definitely looks so. We have been bullish. Well, not exactly bullish, but short-term bullish, definitely. But when the stocks were near the lows, there was a clear panic, and everybody was expecting the continuation towards 3,000 on SPX. Yeah. And we clearly disproved that, and we've been right. But I want to focus more on commodities and the rates, and what is the relationship with the current macro environment. So I prepared a few charts. Maybe I will start with these two.
I find it interesting that you have the beans in there, because I'm a big believer in the grain complex now. With the fundamentals, I can't find anything constructive. That's I don't like bull markets and grains, because I know the implications are for what people are going to have to pay for everything else, food wise. So, but they look like almost an investment class is the way I'm starting to look at agriculture.
Yes, I like beans, especially the meal, but these are not, these are signals generated by a machine learning model. So it's just like a black box, and their purpose is only to alert you about these potential opportunities. Definitely, I would definitely avoid trading them outright. But yeah, soybeans, especially the soybean meal, looks really good. The soybeans probably one of the best among the major grains from the seasonal point of view, positioning and so on. So I agree with your conclusion.
Okay. So I'm through interrupting you for a while.
No problem.
Tell us what you wanted to say to us today.
So I will start with rates, specifically the euro dollar, which is basically futures on 3-month USD LIBOR interbank lending rate. And it's a critical market, because it highlights what the cost of the money will be in the future, at least from the current market perspective. And you can see the current term structure curve for euro dollar. And by the way, the curve goes well into the future, but I will focus on the upcoming or on the next 5 years. You can see the expiration on the horizontal axis and the prices on the vertical axis. If our watchers are not aware or do not know these interest rate markets too much, you can calculate the expected interest rate by subtracting the number from 100. So for example, I have a December 2025 contract that is trading roughly at 96, which means the expected interest rate is 4%. So the lower the dot is, the higher the expected interest rate on this really important interbank market. And there's been a clear shift towards higher rates, which will be clear if I show you the situation a week ago and a month ago. The curve has been shifting lower, which means that market is expecting higher interest rates. As I said, the price is negatively correlated to the expected interest rates. So that's a major move. And the fact is, the market is really tight. The monetary policy and everything else is really tight. It will be clear when I show you, for example, the 15-year average, which means how the curve looked like over the past 15 years at this part of the year, or maybe I can even show you the 30-year average, two things are clear. The curve tended to be much higher, which means that interest rates were generally lower. It's not surprising given the long cycle since the 1970s. And the second thing is the shape of the curve. You can see that currently the curve is upward sloping, but historically it's been downward sloping. That's once again not surprising, because downward sloping curve means that the market expects higher interest rates in the future. That's a normal state of the market. And right now we have the opposite. We have the market that is pricing a huge tightening in monetary policy or general market conditions, and gradual return to normal. And that is where this chart would be helpful. And this is something I watch very, very closely. This is a spread between December 2023 and 25 euro dollar, which is the blue curve. And this is a continuous price, basically an artificial time series assembled from past expirations. So when you hover over the red curve, you can see it's actually 24 minus 22, and the orange curve is 23 minus 21.
And these are euro dollar rates, not euro dollar FX, right?
These, yeah, of course, yes, we are talking about.
I just wanted to clarify it for the audience that this is 90-day paper in Europe.
Yes,
right?
Definitely.
Okay.
For the dollars held offshore the U.S. banking system. This is the most important futures contract around the world. By the way, this is also the most liquid. Nothing is close, not even S&P 500 or crude oil, nothing.
Treasuries aren't anymore.
Yes.
This is cheaper. Okay.
So I will zoom out, and this is why I'm talking about all of this. I got a few questions, both on Twitter and elsewhere, whether this bounce in commodities and other assets is sustainable. And I think this chart provides the answer, because in my opinion, the answer is no. Simply, the monetary conditions have tightened so much that when you take a look to the past instances when the curve was inverted, which means that when the value is positive here on this chart, it means that the interest rates, the December 23 interest rates, the LIBOR expected LIBOR interest rate is higher than December 25. That is what I was talking on this chart. Remember,
so that's extremely restrictive, is what you're saying.
Yes, extremely restrictive. So the market expects that the rates in December 2023 will be higher than in December 2025. Remember, this is negatively correlated to the interest rates. So whenever that happened in the past, we got either recession or a major risk-off event, like after 2019 or in the recession in 2008, or I can even zoom out and you can see the inversion in June 2000. So that is the reason why I think this bounce in commodities is not sustainable. And maybe I can show you the crude oil itself as the most important commodity, because there's a lot of bullishness about crude oil. And we agree in the long term. We've been incredibly bullish energy since October 2020. We called it opportunity of this decade, and we've been right so far. Even in October, just a month ago, in our quarterly macro outlook, we told our users that we are short-term bullish crude oil. But the problem is such conditions usually lead to a risk of event, and a risk of event is not favorable for anything, not even crude oil. So when you take a look to the past instances when we get this inversion on the euro-dollar curve or this particular spread, you can see
it's never been this extreme. Is that correct?
Yes, that's another thing. It has never been this extreme. That's another point.
Okay.
So
You know, that's what's fascinating to me is look at the breaks you got when it was, you know, just a shade over zero. I don't see any one readings.
yes,
But where do you
definitely.
have to go? Is this historical right here? Or do you have to go back to like 1980 to find
Basically,
readings like this?
1970s. Basically, you have to go to 1970s
Okay.
to the Volcker
Interesting.
Fed, and
Yeah.
you know
All
that was
right.
the
I
last
thought.
true hike cycle because you know,
Yeah.
ever since we have interest rates that are trending lower. Of course, there are periods of tightening, like in 2000 or 2005, 6, 7, or from
Yeah.
2015 till 2018. But the
And
point
that was
is,
just fine tuning instead of a real policy,
yes,
right?
because every time it happens, the market or
They,
the economy, more importantly, the economy was unable to sustain higher interest rates,
yeah,
and that's the reason why we've been in a very long, you know, not tightening.
yeah. The others were tinkering because they were
Yeah,
bored at the Fed.
we've been in a very long cycle of loosening
Yeah.
monetary policy since the 1970s. So the situation is not different from the perspective of the amount of debt. The amount of debt after the recession in 2008 is not
Okay.
smaller, it is higher actually. It only
Yeah.
went from, in 2008, the debt went from the balance sheet of banks and basically corporations to the US government. In
Right.
2020, it was similar, only that the debt went from the balance sheet of people to the US government. Basically, all the stimulus checks, and that
Right.
was only about you know, debt reduction. You can see the student debt in the US, the Sally May, and you know, the Biden administration.
Oh, yes. Okay. Where's it
You
going to
know,
go this time? Are we looking at the most hated market right now are bonds, Pavel? I mean, you know, people have gotten cremated, eviscerated in the bond market.
I
But
don't
if we're
know,
gonna
but I have
if we're gonna
another,
have a risk
yeah.
off event like this, and the magnitude is big enough, are bonds the buy of the decade down here?
I wouldn't buy bonds personally because
Okay.
the current environment is different. This is we have a high inflation, which is something
Okay.
that was not present in the past cycle. So definitely the bonds. I have the 10-year treasuries over here are really oversold, and I'm watching the Japanese yen as a proxy for the 10-year.
So whose balance sheet does it go to this time during this event, this risk off event?
Yeah, I mean, there's
Go ahead.
a consensus that there has to be a monetization of the debt and basically printing money to solve the debt. Maybe that's possible. Maybe they will do it. I don't know, but I prefer to follow the data. And even if we will have some kind of monetization on a wide scale, which is basically something that was happening since 2020, it is not immediate concern because right now the monetary policy is tightening. So first we need to have a turnaround on this curve like it was in 2007 or in 2000, which would spark a risk of event, because once this curve turns lower, that would mean the things are starting to break down, and only then it would be acceptable politically and socially to, you know, have a wide scale debt monetization and money printing. So I prefer to focus on the data. Right now the data says the monetary conditions are tightening, and yeah, I forgot what I wanted to say.
That's okay. Yeah, so it's never been tighter since you've been doing this.
Definitely,
Monetary
definitely.
conditions.
It's never been tighter. It's
Okay.
really unprecedented. So as I said, I want to focus on crude oil because our software and our firm is mostly focused on commodities, and crude oil is clearly in the spotlight. And there's a lot of bullishness about crude oil, but as I said, we have been bullish since October 2020, and we are bullish short term. But in the medium term, the crude will probably get slaughtered with the rest of the market once we get the risk of event. And I'm clearly, I'm closely watching the contango. This is actually the backwardation between the 4th and 7th contract on Brent futures. There is no reason to pick these two particular contracts, but I want to move away from the near end because the near end is noisy and there's a lot of speculation on the near end. The mid to back end is less noisy, and you can see that the backwardation currently is slightly elevated from the historical perspective because it is above the 75th percentile and below the 95th percentile when I look at the histogram at the top subchart. And backwardation is usually or basically nearly always connected to physical tightness. That's correct.
Right.
But once we get an extreme backwardation, that isn't sustainable. When I zoom in to the last 2 years and move out, you can see the backwardation spike at the beginning or in March this year. And that was the local top in crude oil. So I would not be so excited by the extreme backwardation in crude oil. So I will be watching this chart, the continuous contango for crude oil, to see two things. First, if we break above 4%, because that is clearly an important level, you can see it around here. Once again, I have no reason to pick these two particular contracts, so the level would be elsewhere on different combination, but that's not the point. The point is that the contango is the volatility of this curve or of the backwardation contango is tightening, it is moving down, and something will happen. So if we break higher and backwardation spikes higher, that would mean the price of crude oil would also spike higher. But it most likely would be the last rally before we get risk off. And I think the situation in 2008 or prior to the sell-off in 2008 is very interesting because you can see that there was a clear divergence between the backwardation and the crude oil. The physical market was getting loose while the price was rising. That was a clear speculative behavior. And once again, I'm not saying it will be similar this time because the market is clearly different right now. I have another chart that will prove that, which is the 3-to-1 crack spread, actually the December crack spread. And it shows that demand for products is really huge. It is approaching levels, not approaching, it is at levels we have not seen before, and we can compare the current level with the level in 2008. So that is really incomparable.
Another extreme.
Yes, another extreme. And keep in mind, the price of crude oil itself was higher back then. You can see it here. The price of crude oil was approaching $150. Right now we are below 100, and the crack spread is way higher. So this market is really different. That's the reason to be bullish crude oil or energy long term. But yeah, I will be following the contango, and I'm really interested to see how this situation evolves. I will also show you the Oman crude oil contango because there is a very similar level, very similar price action. The backwardation is more elevated here. We have just 15 years of data compared to longer history for Brent and WTI. But overall, when I zoom in, you can see a very similar price action It is also around 4% backwardation. And if we get a break higher, that would mean that crude oil breaks higher and we get another leg higher.
So let me ask you this, Pavel. I think that we could rally above 100, maybe trade 108, which would be the second lower high. We had the peak at, on the invasion, then we had a failing rally, and now we're trying to recover again, but I don't think we approach either of those highs. Do you think the S&Ps will give us a kind of a feel for the top in crude, or you think crude will lead it? What do you think? Commodities break because of a risk-off event in equities, or vice versa?
I think that the stocks would lead, but once again, it's a weakly held opinion, because last time crude was holding really well. I can add S&P 500 here, so that we can compare these two charts. And right now, the energy is the cause for many of our problems. So it is only natural to expect that it will be stronger than the rest of the market. And you can see it here. The S&P was
topped
selling
way
off
before it.
Way before the WTI crude oil.
Nice.
But keep in mind, we are already, the stocks are already selling off. So this trend is already underway. So it's important to realize where are we in this cycle. So you can see it here. The stocks were selling off, but crude oil was making highs. So it's,
But do you see what I'm saying? You know what? I like the gap fill at 110 for a sale in crude.
Definitely.
Thank you for showing me this chart. Huh?
That's definitely possible.
All right, so let's mark that down.
Yeah, it's a continuous chart connected by maximum open interest. If I switch to the connected the contracts connected by expiration, it will look slightly different. But I think 110 on WTI is quite reasonable. But I would, as I said, I would watch. I will watch the contango very closely, because either it breaks higher and we get the last spike higher, or if it continues to roll down, that would be really bearish, because that would mean the same scenario like in 2008, and we all know how that turned out. So.
Okay. So actionable wise, am I reading you correctly that you're just watching this bottom chart here to give you an idea of when the crude might revert back to a downtrend and then look to take advantage of the decline?
Yeah, I mean, I would probably not short crude oil, simply because, as I said, we continue to be long-term bullish crude oil. You do not short something, you are long-term bullish. The underinvestment and all the things related to capex and these issues, they are present, and they will be present for years. This is not something that this is what we told our users in 2020. The bull market in energy is not something that will last a year or two. It will last probably a decade. So I would not short crude oil. If I have to short something, I will pick something else.
Stocks.
Either stocks or something that's
silver.
Yeah, definitely. If we get a risk of event, silver will get murdered. It was it was like that every time. But I would look for the weak parts of the market, not the strongest part. So I would not short crude oil. The message is that I would avoid building massive long positions in crude oil right now. Yes, doing small speculations, that's totally fine. But the current sentiment on Twitter and elsewhere regarding crude oil tells me that many people are really going all in to crude oil or energy in general. And that's not That's not the right time to do it. The right
Especially
time was
the stocks. I mean, the stocks are outperforming the commodity.
precisely. If we get a risk-off event, the stocks, the energy equities will get murdered. That would be much worse than the crude oil itself. So this sentiment tells me that people are piling into energy at the wrong time. So the right time was in 2020, maybe 2021.
So
but
what? They're
definitely
2
not
years
now.
late. What's a big deal? Took them some time to wake up, buddy. Anyway,
Yes.
all right.
Yes,
So you're I really love your work, Pavel, and
thanks.
I've invited you to be where I do interviews anywhere I go. So why don't you show people where they can find you and check you out, and you even have some free things out there. Show your website, and
Sure.
yeah. And
Yeah, you
so
can.
really the
Uh-huh.
message is that Pavel's getting out to you guys. Don't get too bulled up in crude, and there could be another shoe to drop in crude. I know a lot of people that are, say that we could, what was the recent low in the 70s, that we could see 60, 50, $40 crude
Well,
in an event like that.
if we get a risk-off event, we can easily see such prices. They would not be sustainable in the long term. That's
Right.
that's certain. But in the short term, when the liquidity dries up, everything that gets liquidated. So
Okay.
So you can always follow our research and use our software when you go to spreadcharts.com. We have a software for commodity markets, and not just commodity markets, as I showed you today with the interest rates. And you can sign up for our software. We have a free and the premium version. Even the free version is very powerful because you get access to all the data and most of the charts. In the premium version, you would get our research, those signals generated by the machine learning model, and some advanced charting features. Maybe one last thing I would like to say, and we already talked about it last time, is that one thing I'm really positive in the medium term, going into the potential risk-off event, is volatility, because it's the relatively cheapest asset right now, and maybe the only one that is trending higher.
Yeah, and you know what? And you're probably right, because people are so disappointed buying the VIX with all these breaks that we've had, and it can't get over 40, that they're probably discouraged, through the last year being long VIX and not having a payday.
Yes, that's exactly right. Everybody's saying that
wouldn't
VIX
you be?
is broken. Yeah, VIX is broken.
Oh, yeah, it's broken. Yeah. So next time we get through, what was it, 32? We could see 40, 50, maybe a spike in vol, huh?
Definitely. And I prefer to follow the VIX futures, and the price action on the mid to back end of the curve is really interesting. This is the fourth continuous VIX contract, and you can see how it is trending nicely higher. So that's clearly one of the best opportunities, maybe not immediately right now, but in the medium term, definitely. So we made, by the way, we made a video about this opportunity in VIX. I guess it was, well, I don't know what it was, but I think it was this. Is it the bear market rally? Yes,
Okay.
that has a volatility tag, where I presented a strategy that, in my opinion, will work really well next year, because trading volatility is hard. Your timing has to be perfect. So I developed a strategy, or devised a strategy that will make well even without precise timing. Basically, I focused on trading the state of the market instead of the underlying itself, instead of the spikes. But
send me that link on Twitter to me, okay? And really, I have to run now. So watch the VIX, look for a risk-off event, very tight, restrictive monetary policy, almost unprecedented since the 70s. And don't get over bulled up too much in crude oil. Short,
Sure,
intermediate
definitely.
term, short term. Am I reading you right?
Yeah, clearly. And the reason is basically this chart. So
Yeah.
I think it's pretty clear.
That is a definitely, when you look left and you see nothing close to it, it leaves an impression.
Yeah.
So Pavel Hala at spreadcharts.com. Thanks for enlightening us once again.
Yeah, thank you, Dale. It was a pleasure talking to you.
Okay, so Pavel Hala, you could follow him at spreadcharts.com, on Twitter. He's very good. He's very good.
Thanks.
Okay.
Thanks, Dale.
All right. That's a wrap, everyone. You could join the team in 10 minutes for the morning edge. I'll see everyone. You're being thanked. See everyone tomorrow for Turnaround Tuesday and a blood moon, full moon, lunar eclipse tomorrow. So get in your pyramids and put on your tinfoil hat. But most of all, don't just count your pips, count your blessings. Adios. Thanks, Pavel.
Thank you, Dale. Bye.
All right. Bye-bye. Watch out, Tulin.